What's up, y'all? It's the Governor, John McLaughlin, with the Abakas. Here for my daily DMR report, January 13th. As most of you listening know, but for those that don't know, the Abakas is a group out here dedicated to teaching black people how to create generational wealth using the markets, learning the methods of investing and trading, so that we can elevate ourselves financially, free up our time, and do the things that we really love, build our communities, etc. The DMR itself is a project we've been doing, analyzing the markets, learning how to create or identify money-making opportunities every day. The original DMR was by Mr. James Tompkins, who is the founder of the Abakas, and he has been teaching a group of us basically the methods for putting together our own DMRs so that we can wake up any day and, identify opportunities to make money. So this is my report for January 13th. I came into today with a little bit of a different mindset in terms of how I was going to put my DMR together. I didn't necessarily do anything drastically different. I just feel like I was a little bit more clear and focused on the type of trader I am, the type of trades I wanted to set up. I got to that point because I basically went back and analyzed all my DMR plays that I've done over the last few months, and just noticed that my most successful plays were ones that had time to mature, whether that be a day, a week, or 2 weeks, or even 3 weeks in some cases. That was where I was seeing the maximum potential of return. That's not to say that most of my plays weren't hitting the day I wrote them, because they were. I think I posted it, last week, that my win rate was about 83%. But that's at varying levels the day of my DMR. If you extended that out and looking at the whole life of contracts, my percentage went up from 83% to about almost 90%. And the percentages for the potential return really grew. The majority of my 100% potential plays were contracts that you would have had to hold for anywhere from a day to 3 weeks. And some of those were in the several hundred percentages and up to 2,000 and 5,000%. Like I said, most of my plays are hitting the day I write them. It's just that I realized that my best plays that I was picking were plays that, if you gave them time, that had time to mature, and if you gave them time to mature, would have a huge window of potential returns for you. And that's not to say, that I would completely avoid day trading. I actually paper traded these plays today, and I sold all of them today. So technically I day traded, but I went into the DMR with the mindset of setting up plays that I did, yes, expect to move today. But if they didn't, hit at a certain level today, it wasn't necessarily a huge deal, because they have time to continue going forward, continue riding up. So I feel like that's a big thing for everybody, really, is to figure out what type of trader you are. I think that's a really important thing, because it definitely affects your strategy, your risk tolerance. All of those things come into play when you're whether you're a swing trader, day trader, etc. All of those things are affected by those strategies. So anyway, with that said, let me get into my plays today. It was a green day. Futures were up significantly in the markets. The Dow was up over, in the pre-market, the Dow was up over 100 points. So everything was looking really nice. My first play I picked was Microsoft. They announced they were working with Samsung to bring back the walkie-talkie push-to-talk features on some phones, and it wasn't that in and of itself that made me feel like they would have a good day. But some positive, interesting news. On top of the fact that it was a green day overall, and then they're also reporting earnings at the end of the month. So kind of all those things combined made me feel like they were set up for a nice run. The contract I picked went out until January 31st, so after their earnings, I believe, or maybe right at their earnings, but they're supposed to report at the very end of January. So this contract would basically run up to that point. It opened at 234, hit a high of 277, which I believe was an 18% potential right there from the open to the high. I actually paper traded this one, and I actually caught it close to the low, not all the way at the low of 208, but I got in at 210. I got out a little bit before the ultimate high. I got out at 262, so I think I made a 20% or 21% or so return, so a little bit better than the open to the high. But either way, it was a solid play that you could give you a solid percentage on the day. And that's kind of what I meant in terms of I'm not going to exclude myself from day trading. The play is set up to go out to the 31st, and it's its performance today was solid in the sense that if you held it, it probably would continue to appreciate. But you have to kind of find that balance of, am I going to go for bigger returns, or am I going to be satisfied with this 20% gain that I have in front of me? And so I'm trying to be disciplined and accept the profits that are there. It's always something that we really emphasize, is taking profits when they're there. So even though I came into this, putting this play together with the mindset of it being a swing trade that I could hold for days or weeks, the fact that I had 20% on the table, I went ahead and closed it out. Now I may turn around a week or two from now and we find out that it's up 100% or 200%, but part of being disciplined is being okay with that and just saying, I got my money, I moved on to the next play and keep it moving. My next play was Lululemon Athletica. They raised their guidance for their fourth quarter report, which is in March. So really that was all I needed to know about them. The fact that they're raising their guidance 2 months before they have to report lets you know they feel really confident about their numbers and that you can expect them to hit those numbers. It would be really unwise to raise your numbers not knowing that you can hit them 2 months before you're about to report them. So their premiums were a little high. I would have liked to go out to February or March, but their premiums were fairly high, so I kept it a little short. I still gave myself a couple weeks to work with, but the idea was, go out a couple weeks and the run will happen with that raised guidance. So it played out beautifully. Went over 100% today, opened at 99 cents and closed at $2. So you'll see that it opened at the low and it closed at the high. So really ran strong all day. That happened actually with all of my picks for the most part. They all closed at a high for the day or very close to the high for the day. So that's another thing I found with some of my day trades. When I came into it with the mindset of a day trade, they would hit, yes, but a lot of the times you have to be real quick with it, and if you don't catch it quick enough, it ends up jumping off the cliff after that and going down, and you miss that opportunity if you don't have the quick enough fingers. So I think that's another advantage for me personally to this new kind of strategy I'm taking, is that you don't have to catch it in a flash. If you don't catch it in that first 15 minutes, it's not necessarily the end of the world because you still have time on your side. That said, 100% return today. You obviously had plenty of opportunity today to make some money anywhere in that range. Third play was JP Morgan. So this is an example of, I'm not limiting myself necessarily to plays that have to go out, 3 or 4 weeks or whatever the case may be, because this one does expire Friday. And really I came into the play with the mindset of this as a day trade. They report their earnings tomorrow morning before the market opens. So the idea is you get in, you ride that price up today as people get excited for their earnings reports. And, once you have some profits on the table, you go ahead and you take those off. And that's exactly how it played out. It opened at 50 cents, got its way up to 82 cents. So you had a potential there for 64% from the open to the high. If you caught it at the low of 41 cents, you actually could have doubled up your money with 100% return. I paper traded this one too. I got in a little bit above those numbers at 55 cents, and I got out a little bit below the high at 70 cents, but that's still a solid 27% return. And again, you can't expect every trade to be perfect. You're not going to always get in at the absolute low. You're not always going to get out at the absolute high. 27% is a number you should definitely be happy with and not have complaints about. Lastly, I had Exxon on the play. This was basically very similar to my Microsoft play in the sense that they had some interesting positive news about themselves today, and they also report their earnings at the end of the month. So they're looking to sell some assets in Guinea so that they can focus more energy on quicker return producing projects in the American Southwest. So I felt, that would give them some positive momentum. They've been kind of struggling as of late. They're off their 52-week highs fairly significantly. So it gives them some chance to run up as you get closer to earnings. And they did, do the same thing. They started at 91 cents. They went up to 113, which I believe was a 24% return, if my numbers are correct, if I'm remembering correctly. I actually paper traded this one also. Got in close to the low, not exactly at the low, but I got in at 84 cents and I got out at 110. So I think that was a 30% return. So from the open to the high, I think was about 24 or something like that. But I was actually able to pull out 31% on my paper trade. So overall, I felt really good about this DMR. All my picks did what I thought they were going to do. All of them gave you a chance to make money. I paper traded all of them successfully. They all ran hard throughout the day, so there wasn't some big drop off. I didn't have to catch it in 5 minutes. I had plenty of time to observe it, decide whether I wanted to close it, hold it, etc. So I felt really good about this, and I'm going to continue with this strategy, this mindset, in terms of my personal strategy and see how it pays off. I know Mr. T has talked about that. I know that's something I've actually mentioned with people on my stop loss consults, is figuring out what type of trader you are, because it definitely affects how you set things up. It affects the type of contracts you pick. It affects your risk tolerance. It affects, what type of percentage goals you should be shooting for. All of those things. So it's definitely important to figure out your personal style. Not everybody is going to have the same trading style. Not everybody's going to be able to operate the same way and have success. So again, I figured that out through a spreadsheet I built where you plug in your DMR numbers. Not only do you track them the day of the DMR, but you track them through the life of the contract. And then you can play with those numbers, sort those numbers all different kind of ways. You can, look at it by company and see which companies you have the most success with. You can look at it by the return and look at which plays gave you the most return. You can look at it by the amount of time on the contract and see, whether you're more successful with day trades or short trades versus, longer trades that go out a couple weeks. So you really can learn a lot about yourself looking at it. You don't need my spreadsheet to do that, but if you want it, it's available. I know some of you have already reached out to me. I do have a template where you just basically have to plug your numbers in and it'll calculate your percentages for you and all those types of things. It is $20, but if you're interested in that, just let me know. And, as always, if you're not in the Abacus already and you're listening and you want some more information about the program, definitely reach out to me, and I would love to help you get started on your journey. So with that, that's my DMR report for January 13th. Hope y'all had a good one. Bless up.